Welcome to Boston Real Estate Times. Our guest today is Jeffrey Myers. He is a research director at Colliers Boston. We are going to talk to him about his first quarter report and research and get into insights that what does this first quarter report indicate about the rest of this year. So Jeffrey, welcome to our show and thank you very much for your time.
Thank you for having me. I appreciate the opportunity and look forward to having a good discussion.
Excellent. So let's first start that, how significant the first quarter report is, because especially this is coming towards the tail end of pandemic. During the last 2 years, there was a lot of nervousness in the marketplace, especially in the office sector and the retail sector, that, okay, what is going to happen to these two sectors? So what does this, your crystal ball of first quarter tell us for the rest of the year?
Yeah. I think the first quarter was a good quarter overall for the Boston Metro. It was the third consecutive quarter of positive net absorption. That means that more office space was filled than it was empty. And that's a good thing because that's what we need in order to keep the recovery going. Over the past 3 quarters, we've seen vacancies start to tick down at the Metro as a whole, and that continued into the Q1. And when you're talking about coming out of the pandemic, there are a lot of questions that have popped up in the radar of tenants and landlords and other investors in the office market. And the positive absorption overall is a good indicator of the opportunity to keep things moving forward despite some of the headwinds that are out there.
Now, before you get into much more in-depth discussion, can you just tell us at the outskirts some numbers? Can you share some numbers right now, like vacancy, etc.?
Right. So when we're looking at the overall office market, like I said, we had about 3 consecutive quarters of positive net absorption. So for the market as a whole, that's just about 2.9 million square feet that have been taken down over the past 9 months. Now, some of that is organic growth from new companies that have been formed in the Boston market and have grown over the past couple of years. Some of that was absorption in new buildings that have delivered, and that was kind of pre-baked in, maybe even prior to the pandemic. And some of that is just the new growth in the market that's been taking place as companies that are here, are moving around and looking for other space. And so we think those are good things. Overall, when you look at the vacancy rate in the Boston office market, the historical average is about where we are right now. A lot of people don't realize that. If you're looking at the Class A market, it's actually a lot healthier than Class B. And I think that's one of the things that the first quarter and really the recovery so far has also taught us, is that the Class A upper end of the market, that's where the recovery is being led. That's where most of the demand growth has gone so far.
So now also I'm hearing that a lot of big corporations, or in mid-sized companies, they still have the lease, and it is showing up as occupied space. But given the technology and given the last 2 years of working from home experience, etc., some of the companies are thinking, you know what, I can do away with most of my space. I just need a tiny space. I don't need 2 people come every day to the work. So how that is factoring it into your numbers, and what is your forecast in the future from that perspective?
Yeah, I think that's been one of the biggest questions that I tend to get is what's happening with return to office and return to work, and what is the impact going to be? I think from the top level, I will say that we're not going to get back to where we were pre-COVID. Alternative working arrangements, whether that's a few days at home, a few days in the office, different work hours, and that flexibility. I think a lot of companies are going to adopt those different types of plans and enact them coming into the future. But that's not to say that they won't need office space. And what we're seeing right now this spring is that a lot of office companies, government agencies and so forth, are making the push to get workers back into the office and actually test out some of these plans. Now that we have more shots in arms and we're further into the recovery in the pandemic and we're past Omicron, the confidence of people to get back into the workplace is better than it's been at probably any other point during the past 2 years. Now, that's not to say we're going to get 100% of everybody in their money at 9 o'clock, but we're going to get people in the office, and that's a good thing. But on the other side of that, I think we need to look at what it means from a growth of the market perspective. Right now at Colliers, we're tracking about 4+ million square feet of tenants in the market in the city of Boston. So even with some of the pullback of tenants who may say, hey, we're not going to need as much space as maybe we did before, given the amount of tenants in the market, given the growth of some companies that are taking place right now, and given the fact that some of these companies actually need more space than they did due to hiring, I think there will be opportunities for landlords to backfill some of that space that has been empty during the pandemic and then maybe emptied out as some tenants do consolidate and downsize.
Now, this also, now I want to ask another question about the life sciences market. We all know whoever is involved with the office space or commercial space in Greater Boston and Cambridge market. We know that life sciences demand is going like crazy, especially for the lab space. And some of the landlords and developers have started to take advantage of that and try to convert their space into the life sciences and labs. So what impact, first thing is how big is the demand? And second thing is that how it is going to have impact on future of traditional life science office buildings in Greater Boston?
Yeah, that's a really important question, I think, to a lot of office investors right now. At the highest level, I think that the life science market will become a situation in which the office market will become more efficient with its space use. What's happening right now is we have millions of square feet across the city of Boston, Cambridge, and the suburbs that is either currently being converted to lab space or is in a pipeline to be converted, whether that's on the drawing board or just on a landlord's kind of wish list. As these conversions move through the pipeline, the tenants in those traditional office buildings that are being converted, they're going to have to go somewhere. And they're going to end up consolidating into the remaining traditional office buildings, which means there's going to be less office space overall in the market with a similar amount of tenants. And that's going to cause occupancies to go up in submarkets across the market. So I think there's a lot of opportunity for the office market to become stronger because of the increase in the life science sector. And it's really unique. I tell you, I've really been trying to think of this over the history of commercial real estate, not just in Boston, but in markets I've tracked across the country. And it's very seldom, if at all, that you'll find something as similar in magnitude, scale, and timing as what we're experiencing right now. The conversions aren't just limited to old Class B buildings, kind of like we have seen in previous cycles with downtown office conversions into apartments or condos or maybe even hotels. We're getting low-rise suburban buildings that are converted to lab, downtown Class A buildings that are 20 years old converted to lab, and everything in between. And as a result, there's a lot of opportunity for the market to become a lot more efficient with what is remaining of the traditional office market. So you're going to see vacant space come off the market, go lab, and the remaining office landlords are going to benefit as that happens.
So now the other question for you is, if you see, traditionally, the Boston commercial market overall has been quite healthy because it has a very diversified economy. You have medical devices, you have, the mutual funds, life sciences, financial services, technology, high tech, all type of, companies you can think of. Now, so much dependence being on just life sciences sector, how risky it is going to be for overall health of the Boston real estate market?
Yeah, I think we're still diversified. I think the headlines do tend to focus on the life science growth because of all the money that's been flowing into it and how prominent it's become. But we're not a one-trick pony. We have a lot of different things going on in the economy. We're also getting a lot of investments that are flowing into robotics, data analytics, information, and other high-tech type endeavors. If you're looking in the Seaport right now, Amazon has more than 1 million square feet of built-to-suit office space that's going up in the Seaport. Google's building space over in Cambridge. Facebook just signed a big lease over in Cambridge as well. These are not life science companies that are saying, hey, we want to be in the Boston area. We're going to bring employees in and we're going to grow in that office market. So we're not a one-trick pony. And even for the life science sector, granted, a lot of that job growth tends to take place in those lab buildings, and that's not going to benefit from a demand perspective directly into the office market. But we do get the venture capital. We get the companies that also help to do marketing for venture capital companies and marketing for life science companies and financing for life science companies. And as those industries grow along with life science, they will be adding demand into the traditional office market as well. So I think there's a lot of different legs that we have to stand on to prevent us from really falling if one of those areas does enter a period of stagnation or slowdown.
Okay. And what is the current office vacancy rate in proper Boston and Greater Boston?
Yeah. So if we're looking at office vacancy rates overall, in Boston proper, we're looking at about 14.2%, But if you split that off between Class A and Class B, you're looking at about 11.8% for Class A, which is pretty healthy relative to the long term, and Class B is looking at about 20%. Now, comparatively, if you're out in the suburbs, everything is looking about 17.5%. But there are parts of the metro, if you get out towards 495, where you easily see vacancies above 20%. On the tightest end, you tend to have Class A properties in the Seaport and the Back Bay, where vacancies are very low, and also in places like East Cambridge, where vacancies are also very low.
And what about asking rents, how they are doing? Let me ask you, how they are keeping up with the market?
Yeah, I think it's kind of a diverging story there. If you're looking at those Class A rents in Boston, where the vacancies have come down and where the market isn't looking that bad, well, those rents aren't too different from what they were 2 years ago. But if you're in that Class B market where the availabilities are really, really high, well, if you're downtown especially, those rents are about 11% off of where they were 2 years ago. So Class A is doing okay. Class B is still trying to dig out of a hole.
Now, your three important takeaways from your first quarter.
Three important takeaways from first quarter. Number one, the recovery is continuing. The demand has been there. The absorption has been there. 3 straight quarters of positive absorption for the overall market. Number two, the life science market is going to have a positive impact overall on the office market due to that ancillary job growth we talked about, but also especially as these conversions move through the pipeline and cause a more efficient use and a consolidation of office tenants into the remaining office space. And number three, I think we have to look for landlords to eventually gain more pricing power as fundamentals continue to improve.
What about, I think we have to talk about a little bit industrial market, because that market has come roaring back into the in the game here, and there's so much demand everywhere for the industrial market. What your report says about the future of industrial market?
Yeah, you're saying investment sales?
Yes.
Yeah, so I think when we're looking at investment sales, that's been a really interesting story over the past couple of years. If you look back at 2021 and 2020, and you look at all markets across the country, the Boston market was one of the top markets for investment sales in its office property type. And that was largely due to the number of investors that have been coming into the market, looking at office buildings with the idea of saying, hey, this might actually be a good lab opportunity or conversion opportunity. And the price points on these properties are extremely high these days. If you're looking at a property like over in Cambridge, we had 1 Rogers Street and 1 Charles Park, $815 million valuation on that deal. That's almost $2,000 a square foot. If you're in downtown Boston, we have 55 Summer Street, moved in the first quarter. Phase 3 Real Estate Partners is looking to take that one to life science use. Again, $860 a square foot. And then for those of you who've seen the building, you can imagine that that's an interesting location to be in. And you're getting similar types of deals, not at the same price points, but as far as in the suburbs of going to potential life science uses. That's really been a big driver lately. And I think that will continue to be the case as we move through the 2022.
So is there any healthy correlation between the valuation of the properties and current state of the market? How the values are fluctuating or stabilized, or what is your forecast on that? If you can explain a little bit in. Go ahead.
Right. I think that as long as investors see opportunity in the life science market here in Boston, the potential for those high valuations will continue. I think that when you look at Boston and the types of investors that are making these purchases, look at Alexandria Real Estate Equities. They've invested a lot of money here lately. Well, they're a national player, and they get where tenants of the life science industry want to be. They're active in not just Boston, but also in markets like San Diego and San Francisco and the Bay Area. And they see where the demand is really wanting to be, where companies are wanting to be. And that's why companies are coming here and investing in properties that they think will be able to satisfy that demand.
And also, you know, I'm noticing that the developers and investors are paying special attention to key industrial locations, key industrial properties, manufacturing properties in this area. Can you talk a little bit about that in your report?
Yeah, I would say that the life science market in the Boston area is not just about labs and research anymore. It's also about production of what those labs are researching, the medicines, the pharmaceuticals, and those products. And having more of that CGMP space located nearby is something that a lot of these companies want to have. They want to be able to do the research and take advantage of all the brain power that's here, and then actually produce those medicines and those pharmaceuticals at a distance not too far away. And that's something that is a real growth opportunity in the market and has caused a lot of industrial properties to maybe say we don't want to be a storage or a warehouse or distribution anymore because the rents on that life science side, that CGMP side are higher. So we're going to satisfy that demand instead. So you're also getting conversions in that part of the market as well.
Now your last word before you end this
interview. I think that Boston is well positioned to continue to grow into 2022. I think there will be some headwinds. You never know when the next pandemic-related or world-related, as far as geopolitical things might pop up or inflation's high. But when it comes to the fundamentals of Boston, the brain power we have here, the companies we have here, the industry mix, I think we're well positioned to continue to grow in 2022.
Jeffrey, thank you so much for your time. Really enjoyed talking with you.
Thank you very much for having me.